Hello, this is Joseph Gillette with Venture Capital Cross, reaching out regarding the situation with markets and tariffs. I would like to go over the global macro picture, which the conclusion is of the macro analysis of what's going on. This will be a net benefit, a huge benefit to the U.S. venture capital industry, to the United States, and to consumers, and to U.S. and to the people, basically. The losers of what's going on are going to be foreign countries and mega cap huge corporations, which are basically tied into those foreign countries. Like Amazon, for example, they were doing studies that something like 80% of their suppliers are from China, actually. So what's happening with tariffs, just to put everything on a level playing field, the United States has always been at a disadvantage because every country puts tariffs on U.S. goods, but not the other way around. Now, many people are probably thinking, how did we get such a crappy deal? Well, the answer is you have to go back to World War II and the Bretton Woods Agreement and the Marshall Plan. So after World War II, there was really only one country that wasn't bombed into oblivion, that had resources, factories, people who were not, Americans were killed in World War II, but the war didn't really hit mainland U.S. soil. So we had infrastructure, we had factories, and in order to rebuild the rest of the world, we started producing things in our factories. And in order to encourage their factories to produce goods, we made it easy for them to sell their goods in the United States because it was the only place you could sell anything. So we built up all these countries by buying their stuff, most notably Japan and Germany, which were our enemies, and we had a security agreement with Germany. We still have U.S. bases there, military is there, and the agreement was something like this. We will give you money, but we're going to give you U.S. dollars, and you're going to use those U.S. dollars to build factories, and we're going to buy your products, whatever they are. Cars is a great example because almost even Russia produces cars, even though it's not a significant car market. So that happened after World War II, and this was on the back of the Bretton Woods Agreement, where the whole world agreed that the US dollar is as good as gold. And what that meant is in the time, you could actually take US dollars into the bank and get gold. That didn't last long, but after that, the US dollar it was the reserve currency for all the other foreign currencies in the world. So the United States was backstopping the whole world economy. So this whole notion about like China holds our debt and China's going to obliterate the US economy, it's absurd, because all these economies, including China, are supported and created by the United States. Now, the problem is what started happening over time. In the beginning it worked, and it still works, but the problem is that over time it starts to become toxic. How does it become toxic? So there's zero tariffs on foreign goods coming into the United States, and huge tariffs of American goods going out. So what happens, and this started becoming a problem in the 1970s, companies will start manufacturing where it's cheap, like China, Mexico, wherever, and selling where it's expensive, the United States. So we're kind of importing inflation and exporting manufacturing. And by exporting, I mean offshoring is the term that they use. So we're destroying our own manufacturing base. So we're saying, okay, you do the manufacturing in China, you send us all the goods, and we're going to send you US dollars in exchange. And that's fine. The problem is when you're not making anything. Now remember, in the beginning, there was only one manufacturer in the world, the United States. Okay? So at that time, we printed money and gave it to China. We gave it to Japan. We gave it to Germany. We gave it to almost every country on the planet. It's called the Marshall Plan, named after General Marshall. And he literally went around the world handing out bags of money. It was literally bags of cash, because in that time, there wasn't like you didn't have like a debit card. They had other instruments. They had gold and things, but they all actually gave bags of cash to people. the amount of money we printed to facilitate the Marshall Plan was enormous at the time. And then they understood something when this happened. Number one, they understood the power of the printing press and that they didn't actually need to create anything. In other words, they could just create $1 billion, send it to China, and they're going to send us t-shirts. So what happened over time, now remember, this is like an inverse curve. I mean, I can draw it, but it's just like this. There's no factories in China. China was a rural wasteland after World War II. Even in the 1960s, China was not industrialized. So no factories, all factories, and it just, over a period of 70 years, it just flip-flopped. So the factories moved from the United States to China. Now, China holds all the cards. Now, the Chinese are not, I don't know how to say this politely and respectfully, but China has been kind of playing the dirty game. Not the gentleman's, not the long game, like the British would do. So the Chinese have been abusing this system. Their currency is fixed. They steal our intellectual property. There's no rights in China. I had a friend in China that had a neighbor who was in prison for 5 years because of the Facebook police. The guy was using Facebook. Internet police came, arrested him, and my friend was worried because he had an illegal satellite because he liked NBA basketball. I mean, China is not, when people say the US dollar is backed by nothing, this is the biggest fallacy in finance because, number one, there's not many countries in the world where you can invest, start a business, open a factory, open a hot dog stand, make a brand, create something, and if something goes wrong, you can protect yourself. I mean, if you invest in Russia, there's no court system in Russia. It's kangaroo courts. Everyone knows it. In Asian countries, including New Zealand, you can't really own property. I lived in New Zealand, and it's called freehold. You're kind of leasing it from the Queen for 99 years or for in perpetuity. But the point is, the legal system in the United States is very unique. There is freedom here. There are rights. I mean, even with all the fascism that's been going on recently and the government rules and the Patriot Act and all this, you can buy land in the middle of America and do whatever you want. As long as you're not making meth or doing something really crazy, you can pretty much do whatever you want. And there's lots of people like the Amish, and there's all kinds of groups that just stick to themselves, and that's unique about the United States. In Germany, you can't even homeschool your kids. So what backs the US dollar? Manufacturing, freedom, which means the legal system, and that backs the markets. The markets are an afterthought. In order to have markets, you need to have law, and you need to have rules. And even though there's groups in the United States that try to push us to a kind of jungle rule, the legal system of the United States is still a lot more functional and fair than Europe or other countries. Another problem in Europe is that in Europe you have a very big establishment that is not very flexible. I think Europe has some of the lowest social mobility of major regions. Or pretty much, the United States is really an exception, and maybe Australia, I don't know, but the U.S. is leaps and bounds above any other group of nations in terms of social mobility. That means in Europe, if you're born into a family of plumbers, you're probably going to be a plumber. Europeans have this thing that I have some friends that in 3 words, they can guess where you're from, like where you're born, where your parents are from, and what's your status. Are you a blue-collar worker? Are you from the aristocracy? Are you a government bureaucrat? Just by the 3 words. And I've heard them do this, and it's kind of interesting. America's obviously not like that, and Americans could care less. We're not, even with all the cliques, and you think that New York and some of these Beverly Hills is cliquey, and there's little social groups, Europe is 10 times worse. And why am I saying all that? Because investors want to see an exit, right? I opened a company in Malta, and I was very dissatisfied with what happened with the government there. They made some rules that they became kind of like a mafia state. And we wanted to close our company, and we cannot. We must pay thousands of euros to close the company. We must hire a guy who's a judge to ascend to the throne. That's the Roman law in the Maltese law. Ascend to the throne, which is basically a old chair in the middle of town where this guy will go and he will cry, hear ye, come forth, thy have any debts. So this is actually how you close a company in Malta. I mean, it's insane. At the time, I didn't have money to pay that guy and he puts on a wig. He had to wear a special hat, and he had a scepter. I mean, I mean, when I learned all this, I thought I was like in another reality. I mean, I know Malta is weird, but come on, guys, it's no place to. There's no. I'm not big on European venture capital. Skype is from Europe, but some of the rules are just are the UK isn't so bad, but the UK isn't part of Europe. So the point is that the United States, because of the rules, because of the way the system works, we have monopoly capitalism. It's not really fair because it favors those with big bank accounts, and it's kind of a big bank eats little bank kind of system. But it's light years ahead of any other system. I mean, there's no other system that even compares. And so for that reason, people invest in the United States and U.S. companies because this is an environment where companies can grow, investors can make a profit, investors can sell. Foreigners don't pay capital gains tax, I don't think. So, I mean, the foreigners who invest in the U.S., we have a huge amount of, the IRS tracks this, it's called foreign direct investment, huge amounts of foreign direct investment. The Saudis, lots of people pour money into the United States. Why? Not because they love America, because there's nowhere else to go. Where are you going to go? You can't invest in China. It's illegal in China when you want to do business there. American Express and all these guys that wanted to go there, you have to set up a joint venture company, and it's like that in Dubai too. And they have the Sharia system. You can't have a profit. You have everything is sharing, and that's fine. I mean, every country. I'm not saying that our system is better or anything like that. I'm just saying practically, America is the most capitalist and most free country, and that supports the U.S. dollar. It's not a case of, oh, the dollar is backed by nothing. That's not true. It's backed by all the assets and all the resources in a functional system. And that's why people use the US dollar compared to another currency. So all this talk about the dollar collapse I'm skeptical about it. And I'm an FX guy. And the reason is, what's the alternative? So when the US dollar kind of became a thing, it was at this time I'm referring to after World War II, because the United Kingdom was not only broke, it was physically destroyed. London was bombed. I mean, it was in bad shape. They had debts from the war. England was always a small country anyway, so it wasn't like, I mean, the United States is significantly bigger, so there's that. So I'm all for having a new global reserve currency, but who is it? It's not China. China is a toxic house of cards. It's certainly not Russia. I mean, I think of all the countries in the world, the country that could replace the United States as the world reserve currency could be Russia, but that threat has been neutralized by the elites that don't want that to happen. So what do we have left? We have a U.S. that originally had a U.S. dollar hegemony system based on freedom, capitalism, law, markets, and manufacturing. Manufacturing is key, because if you're not making anything, it's all abstract. I mean, I'm a trader. I'm a Wall Street guy. Trading it's called a tertiary industry. That means trading doesn't produce value per se. It produces a derivative of value. I'm buying a stock. I'm selling a stock. I have a profit. What economic value did I really achieve? Now, obviously, I'm going to take that profit and I'm going to go buy lots of smoothies and salads and spend the money. Earn it on Wall Street, make it on earn it on Wall Street, make it on Wall Street, spend it on Main Street is the expression. So there's that, but you can't run a global economy without manufacturing. And whatever you think of Trump, and maybe, I mean, who knows? It doesn't matter. The point is, that's a fact. In order to run a global economy, you need to be the manufacturer. You can't be a middleman. There's no money in brokering. And that's what China understood. So China's been just slowly manipulating the system, being the manufacturer. And they played a bad hand. I think if China had been more fair and not been such blood-sucking vultures, they could have replaced the U.S. as a real system. But the problem is they don't have freedom and capitalism. They have communism. So, I think the largest cigarette company in the world is owned by the Chinese government. They make cigarettes in China. There's just so much fraud. I mean, plus the government itself is, I don't want to say it's a fraud, it's communism. So we've seen that communism doesn't work in Russia, and there's tons of examples, but China is a bankrupt, corrupt system that will never compete with the United States because you have to do so on a fair playing field. So I hope China digs themselves completely into this hole and they will just be cut off from the system because, here's the other thing. This is anecdotal, but think about this. Appliances are cheaper because they're made in China, but they last less. When's the last time, there's this thing I saw, and I've seen examples of this, that someone bought a washer or dryer in 1980 or something, and they repair it once in a while, but it still works. Because stuff you bought back then, it was hard. It was stuff you buy today. It's some of it's even broken in the store. I got a pencil sharpener at Lowe's. It's probably made in China, and maybe it was used, but it was in the packaging, and I thought, how could something be used in the packaging? Well, the answer is because it's coming from China. So are we really saving money? Or are we just importing garbage to save money? In other words, there's no savings. If the pencil sharpener was built in Alabama, maybe it would cost twice as much. But do you need to buy 20 pencil sharpeners? You know what I'm saying? Now things have become so cheap and useless and money so worthless. And of course, this is all tied to inflation. I didn't even get into that. The whole system is like a toxic balloon. You've got inflation. The biggest hidden inflation is the deterioration of quality. Like the potato chip bag example, Lay's has less chips in the bag, and they make the bag bigger because there's less chips in it every year, and because of inflation. And it's not really their fault. The whole financial system, the way it's set up, is a game of hot potato. This ends that. So when you take tariffs, are really just the first step in a long plan, and it's really kind of obvious what's going on. Doge is cutting the fraud and waste in the government. The tariffs are going to rebalance the manufacturing base. We'll get some income, but it really is not about the income. I think the income is really a side note because even if the income is $1 trillion, it's nothing compared to how potentially toxic it is if it goes in the other direction. And that's the other thing. Even if this wasn't done, the whole system was unsustainable as it was going. So if we had continued down this path, something would have blown up. Things have gotten so bad. When we put the sanctions on Russia, we sanctioned the largest oil exporter, or you could say the country that controls the global oil market. Russians are a lot better than the Arabs about oil. They're just quietly selling oil. That's really all they want to do. They don't want to get into any wars. They're very defensive about that. So we sanction Russia. immediately you had this rift in currencies. You had the commodity currencies, the OPEC, the BRICS, minus China maybe, versus the inflationary currencies. And the inflationary currencies can just print their money and buy more commodities. But that's why you see inflation, because you have to print more to get the same things. I mean, it's simple supply and demand. You've got the countries with the commodities are not using the US dollar, but since the US dollar the US economy doesn't produce anything, we have to print more dollars to buy the stuff that the commodity countries have. So what does that do? It drives the value of the dollar down. Inflation is not merchants raising prices. This is the biggest myth that the elite tries to confuse the population with. Inflation is caused by monetary policy and White House policy, these two things. And they're both equally important. Because, look, the White House policy is going to determine, in this case, tariffs. You can see the dollar moving on these tariffs. So what happens when you lower interest rates, like to zero, and you lower the reserve requirement almost to zero, which is a leverage function? The value of the money goes down because there's more of it. So if you create $1 trillion and you just throw it out of helicopters, like Ben Bernanke, the value of the dollar goes down by exactly $1 trillion, divided by however much money is in circulation. So if there was $1 trillion in circulation and you threw $1 trillion out of a helicopter, it would go down by half immediately. Probably more, because there's some kind of knock-on effects. But that's effectively what causes inflation, is monetary policy and White House policy. How does White House policy impact inflation? Well, everything is oil, right? So when you sanction the oil producers who have the oil and the price of oil goes up, all of the things that we do in the United States are dependent on oil. So the average tomato travels 1,500 miles from farm to table before you eat the tomato on a truck. 1,500 miles, a tomato. So all that is gas, all that is oil. And we don't really have, trucks and oil drives boats and trains and maybe a little coal with the trains, but mostly oil drives all trucks, diesel. And so that caused supply chain issues, the sanctions, because things had to be switched around. We couldn't accept Russian oil, and there were rules about that. And then, of course, COVID really put the nail in the coffin. But the point is, this was White House policy that was creating problems. It can also create solutions, but it's not only the Fed. So they use this against us, because you have to remember two things. Well, actually many things. It's kind of a complex thing if you don't know the basics. The Fed is a private bank, which is owned by the banks, but it's not connected to the government. But it was created by an act of Congress. So it's a very tricky situation with the Fed, because the Fed is effectively a private banking currency that the government gives the private bank permission to issue. Not all central banks are set up like that. There are some central banks, like the Russian central bank, which is 100% owned by the government, and the Russian currency is part of their sovereign currency. The US dollar is a private currency, and it works, so there's nothing wrong with that. The point is to understand the relationship between the government and the Fed. So the Treasury and the Fed are like two different things, and they work together like yin and yang. And so you can't blame the Fed for monetary policy, and you can't blame Washington. It's both of them, and they work together in ways that they don't need to agree, they don't need to sit and have meetings, they don't need to collaborate. They're always doing something that affects things in one way or another. And in both cases, both in the Fed and in DC, you've got people who want a strong dollar and you've got people who want a weak dollar. It's a simple thing. If you're an exporter, you want to have a weak dollar so that more foreign buyers will buy your product, and the opposite if you're an importer. You want a strong dollar and you can buy more products. So it's kind of like a push-pull type of thing. And that's natural market forces. But what I'm saying, over the long epoch of what has happened in the last 70 years since World War II, because we eroded our manufacturing base so just almost to zero, it's created this toxic problem. There's a big hole, and we can't fill that hole with enough money. We can't print enough money to send to those countries that are creating the factories, that are creating the products with the factories. I mean, we've reached like a ceiling where the system is just not sustainable anymore. So this is really the only way forward. So all these people who are feeling the pain now, I mean, I'm not saying it's good. It sucks when the stock market is down, and there is going to be short-term pain. But if we didn't do this, the whole system would implode. It's not sustainable to continue like this. So this, at the end of the day, it's going to be good for Main Street. It's going to be good for venture capital. And I was Googling it to find an article to reference it. And the AI answer on Google says this is bad for venture capital. And the reasoning is because all the startups manufacture in China. Well, wait a second. Short-term pain, long-term gain. Google is wrong about that, okay? So that's why I'm making this video. This is going to be very good for the United States as a whole. It's going to be good for Main Street. It's going to be good for venture capital. It's going to be good for Wall Street too. It's just that Wall Street and China and these countries have been gaming the system. At the end of the day, the whole pie of the world economy in 5 years is going to be 10 times the size it is now. I mean, it's going to just balloon. Not because of inflation. The difference is, what they've been doing is, they've been blowing up and inflating an inflatable balloon. But it's just a balloon. We are going to create something which is solid, that is sustainable, and it can grow just like wildfire. And I'll leave you with the most exciting thing. We're doing all this now. We're setting the groundwork. We're building a house. This is the foundation. We couldn't have started building a golden age house without this foundation because it was unfair. We were the only ones in the world getting screwed. Even small African nations were getting a better deal than the United States. So that had to change. But at the end of the process, when we clean out all the corruption, go after this deep state human trafficking guano that's going on, we have free energy. We have it. We have technology transportation technology. We have, for example, if you want to look up about that, look at the tunnels that Elon has mentioned that we have. We have health technology. We have so much that's been kept under lock and key. So just releasing some of that, it'll just blow up. But we have to have a foundation to do that. We have AI. AI is just at the beginning of a huge productive cycle. So I think exciting times ahead. It's going to be good for even China, I think, in the long run. But the people who were taking advantage of the system are the ones that are pissed off. If you want to take an example of the Doge with the corruption, if I'm getting paid, if I'm Chelsea Clinton or Hunter Biden, and I'm getting paid $10 million a month for researching transgender rat operas in Guatemala, and then my checks get cut off, of course I'm going to be pissed. And of course I'm going to hire some protesters to burn down some Teslas or whatever. You know, I'm just angry. It's the same thing with China. I mean, they were kind of taking advantage for so long, and now we're saying, no, we're going to have a fair deal, 50-50. They're not happy. So it's not exactly a trade war. It's just a little, I would call it more like turbulence in the folding of space-time. But it's, once we get through the short-term pain, it's just going to be off to the races. It'll be the biggest bull market that the world has ever seen. But it's going to be sustainable because this market last 20 years has been, PE ratios have been just crazy. Valuations are sky high, but not really based on much. I mean, there's some exceptions, but generally, it's been unsustainable. And the reason is because of this big issue that I've been mentioning, which is the US dollar has been just creating more money. And one note about that, when the United States creates money, when the Fed creates money, it's debt. It's not a money-based system, it's a debt-based system. So, because what they do is, the Fed, let's say I call the Fed, Art Charloff used to do this, he used to say, hello Fed, I need $20 billion. All right, 5 minutes, thank you. Because he was from that era. Fed gives, let's say, Bank A, $20 billion in the form of a loan. Now, the interest rate may be very small, but it never gives the bank cash. It always is a loan. So when the Fed is issuing new money, it's not creating new money. It's not creating M3. It's creating loans. And those loans get then sold. It's a wholesale loan to the bank, and then the bank sells it to another bank or to a consumer or to a business or to the government or whoever. There's an interbank lending market where this happens. And then what happens, there's more debt. So they say, like, if we actually paid off all the debt, money would cease to exist because it's all debt. So a debt-based system. So and what do the banks do? The big banks, they borrow money and they buy stocks. The stock market goes up. That's not sustainable. So what we're going to be doing now, we're going to go back to a 1950s system where maybe the dollar isn't backed by gold. I'm not saying that. I mean, metals are always good to have in your portfolio, but it's not necessarily going to look like what people might think. It's not necessarily going to be QFS or a US dollar blockchain. I don't think it really matters what it is, as long as it's backed by something and it's tied to reality and it's sustainable. The financial system just needs to support the economy. Banks need the economy. The economy does not need banks. I mean, in an ideal world, we would have one bank that everyone could use for free with no fees. And I mean, what is the bank really doing? The bank is just a middleman between the Fed, and that's how the system is set up. So we're going to move away from that. So we are moving to I would say, like a more decentralized system, but I don't think that crypto is going to play such a big role like people think. I mean, it is cool. I'm not negative. It's just, it's like Bitcoin, for example, is a Ponzi scheme. You need more money flowing. You need US dollars, more US dollars over time flowing into Bitcoin to keep the price going up. As soon as the US dollar stops flowing into Bitcoin, the price is going to collapse because you have the mining problem and electricity. So once all 16 million or 21 million Bitcoin are mined, then what? You know, it's a Ponzi scheme. I mean, it's just US, but it's based in US dollars. It's not an independent open system. And so the stable coins are a better idea, but it's not really. I think that the whole crypto thing was just a ruse. It was a psyop, and that's not the future. So I'm going to end it there. Be safe. Markets will remain to be volatile. There'll be short-term pressure, short-term suffering. This is a good time to go back to the drawing board and manifest, meditate, look at your business model. What worked in the last 2 years? What didn't work? Just focus on what works. Keep going. It's going to be good times ahead. And I'm not saying that like 2 weeks, have hope. I'm not selling hopium. This is an economic fact. If you look at the macro picture, this is very positive, what's happening. I mean, there's not many unknowns. We know what's going to happen. Even if China doesn't capitulate, we know what's going to happen. People will start manufacturing in the United States. And the question is, do we have that capacity? Of course we do. We have thousands of buildings that are empty. We have unemployed people. What are we going to do with all these illegals that we can't find? We have plenty of people. We have plenty of technology. We have plenty of capital. We have investors, companies raising billions of dollars in a single round. I mean, we can build factories quickly. You should see that housing. There's a house down my street. It's like 1 month it takes to build a house. We can build a whole factory in a couple months. Massive factories. So yeah, we can do it. And this is going to be the catalyst that does it. So it's not, I'm not like a cheerleader. This is a global macro fact, because those are the variables at play. That's how currencies and markets work. And this has been driving inflation, and this is the toxic cancer that's been eating at the US dollar for a long time. So Fed policy and the White House, these two things are creating a solid US dollar or not. So this is a very solid foundation. It's going to be good for Main Street. It's going to be good for venture capital. And in the long run, I promise it'll be good for the Chinese and for Wall Street. If it's not already good for Wall Street, the big companies, the global companies, the Mag 7, they're just going to need to adjust. So there's going to be an adjustment period where there might be some turmoil and turbulence, but that's something that they should have thought about. I mean, it's not. They've been also kind of, all the people that are suffering or have problems have been kind of gaming the system in a way, like public stock markets. I mean, they know about earnings. If they put it low and they beat it, the stock's going to go up. I mean, they've created a game out, or they've gamed the system in a way. It's like life hacking. You know, they've figured out what works and they just do the bare minimum to kind of push things through instead of creating real value, which is what they should be focused on. And I'm not saying that they're all like that, but the point is the ones that are really suffering are just part of this global inflation scam, basically. Its system has been a scam and Ponzi-like, and it benefits a very small amount of people at the top and a very few companies at the top, the mega caps, at the cost of all the little guys. How many small businesses were shut down or forced out of business during COVID? But it was the Walmarts and the huge behemoths that really were just counting money. And so this is a rebalancing of globalization and making the world more flat, as Thomas Friedman said, more flat and fair. So it's a good thing, so hang in there. And venture capital is going to be the place to be, because new things are going to be started. Companies will finally come to the United States, and they're going to partner with U.S. companies and U.S. individuals. People are going to be hired. So I would say in this downtime, just focus on your skills, learn a new skill, go to Udemy, take a course in something, get a license, get a degree, educate yourself, learn how to use AI, learn how to do programming, just learn something that you're interested in. It could be anything. And we're all going to be great. So that's all. Be well.